Here we are on the euro dollar 240, and this is a trend continuation trade I've been trying to get in all day. The setup actually happened several hours ago, but due to the risk to reward, I wasn't able to get my entry that gave me a favourable risk to reward. What I'd like to do is run through the high time frame analysis and show you why I've waited for this trade and why I've entered where I have done. So in order to do that, let me go out to the dailies and have a look at this. So let's remove the orders first of all. Okay, there we go. So here we are on the dailies, and what we had is, if we put a structure level in here, you can see that we have a area here that has been respected 6 times, and what we have just done here is we put in a lower low, lower close. This was yesterday, and what price is doing now, we're rallying back up. So we've had a break below, close below. This was actually a channel that we had here, and we did have a breakout here at the bottom, but obviously we pulled back into the channel there and respected it, and now we've broken to the downside. So certainly looking at the trade here, we can potentially come down to this zone. So let's drop to the 240, and here you'll be able to see that we are in trend. So we had a new structure low, outside return, new structure low, outside return. We've made a new structure low, so we're looking for an outside return anywhere within this zone. Now you can actually see the reason why I've waited here, because what's actually happened is, if I move the structure level to there, you can see that we tested it there, and then we put in a big 4-hour rejection candle right at that zone. But if I drop to the 60-minute time frame, you'll be able to see here that we actually had a nice 3-bar reversal. So we had move up, then we had a rejection candle closing in the lower quarter of the candle with a big wick, and then it was followed by a solid lower low, lower close candle. So what this means is that on the 240 we held that zone, we had the lower low, lower close, but my risk to reward here would have meant that I would have had to have gone an ATR above the high, currently 17, so that would have made me 59. So this would have been my risk, and the only problem here is that well, there are 2 problems. One is that's more risk than my reward. Best case scenario is a retest of the lows, because this is trend continuation. We're looking at the market coming lower, so you can play for a retest of the lows, because your secondary targets, you are playing for that extension to the downside. But you can clearly see here we've got an inverted risk to reward. Now just remove that. What you can do in this instance then is you can say, okay, well, I'm going to wait for price to come back up, because a lot of the time you will see price retrace. It may even go a lot higher and give you a better entry reason. Not every time, but sometimes. Now the other problem here is that the stop has just gone an ATR above the high. It doesn't actually get us behind any real structure. The stop being up here is by far the safest. So I've needed a better risk to reward here to take more of a shot at this trade. Now it's less of a shot, because if we go back to the 240, while waiting for that retracement at 6 o'clock, we had this big 4-hourly candle, and this in itself is a bigger indication that there's a lot of selling pressure here. I mean, we closed here in the lower 20%, and we've held that structure level. We haven't violated it. Now the time is 8 o'clock at night. This candle that we're currently seeing at the moment has another 2 hours to go. It is quite conceivable, based on the candle before it, this big rejection doji, that this can get sucked all the way back down, and we can put in a lower low, lower close. So this is the beauty for waiting for the retracement, to give you a better risk to reward, and it allows you to see how the higher time frame candle finishes as well. So right now, if I bring the orders back on, I keep doing that, let me bring the orders back on. we now have a risk of this much and now a reward of this much. So now we have a favourable risk to reward. Now if you're asking, well, why didn't I wait for price to come up even further? And the answer to that question is this candle. Look at the 4-hourly candle. It is conceivable that the next couple of 4-hourly candles could work their way all the way up to the top of this wick and be within the wick of this candle and still be valid. But what you don't want to do is, with such a strong bearish candle here, is to miss the move. So I've done a couple of other things, and just let me draw out target 2s here just while I'm on this page, just while I'm on this time frame, should I say. Okay, let's make that yellow. Okay, there we go. So let's drop to the 15 minutes and I'll show you what I was looking at. If I'm looking at that big rejection, I'm anticipating that we're going to start dropping shortly. That would be what I would expect price to do. Of course, it may not do that. It may just simply it may just simply carry on up for the time being. But if we remove these orders and look at what price is doing, in fact, you know what, let me go to the 5 range. We've actually put in a little bit of a head and shoulders here. So left shoulder, head, right shoulder. We have just violated up here. However, if I'm expecting price to come lower, then this head and shoulders can do a couple of things. First of all, it can come right back up to retest the highs. So that would be the wicks of that 4-hourly, and I would not expect it to go any higher. Or these head and shoulders patterns are valid from the AB equals CD pattern, which comes in here at 115.17. And if we put a fib on, that just so happens to come in at a 382 fib. So I've just sold the market because we hit the 382, and so this is a safe place to sell the market rather than wait and see if the market comes all the way up here. Okay, so I've waited for a better entry reason, and I've used all the different time frames here in order to get that better entry reason. Now, of course, it might not happen. We might see price rally all the way to the top, but it's allowed me to get a better price. So I know I've been waffling on a little bit here regarding this, but I think it's quite important to talk through the analysis. My trades now are all about risk management and risk to reward. This was an inverted risk to reward. It would have meant that I would have had to have gone for my first targets as an extension, but as it is now, I can actually get them being a retest of the lows, and what that means is I'm able to bank some profits, I'm able to move to break even, and it is just a far better setup for me. And so target 2s, if I just move this up here to target 2s, what we have here is we have this structure level here. It's been tested 3 times. And if I zoom in and put an inversion on, you'll actually see an inversion of our most recent leg, that we have right here the 127 fib coming in at that structure level. So my orders are just above that. So we've got a good place there for first targets, secondary targets, and we now have a 1-to-1 risk to reward with a high probability with that hourly and 4-hourly candle, and also the AB equals CD pattern on the 5 range, and hopefully we're going to see this thing turn around. And if we don't, well, we've got plenty of room here for this thing to go higher and then turn and drop and hit our target. So that is the trade. That is why I've waited to enter in on it. I'll set an alarm here and we will come back and see if this trade wins or loses. Little update on the euro dollar. We're pushing down now, as you can see here, just starting to make a new low. We've got around 1 minute to go till this candle closes, and if we can close below this level, this will give us a new structure low and a good opportunity for this market to continue down then and hit potential targets. And we're back, and we have now come around half a pip from targets. Hasn't taken us yet. Obviously it does need to hit the line and just go past it slightly. The euro dollar has a spread of around 0.1, 0.2. If this hits secondary targets, this will be in total a winning trade for 65 pips. Okay, we're back down retesting my take profit line now. We're just once again 1 pip away here. Let's see if we can get this thing just to push down and tap my buy order so that I can get out of this market. Come on, half a pip. We've gone oversold here on the RSI, so I'm expecting some kind of rejection at some point. We are coming down into structure as well. Now this might be a good place to look for a counter trend move. We've passed a 127 fib. We're currently at a 16. Oh, look at that, we're dead on a 1618. Okay, all right. We're dead on a 1618 there with the RSI going overbought. I'm not bothered about that 1 pip that I've missed out on. Just let me zoom out and see the structure level that we're at. And as you can see, looking left, that line is right on where this we've had this rejection in the past. That came into now a 1618, which will also be, I bet, an AB equals CD pattern. Yeah, look at that. So with the RSI as well, I'm not bothered about the 1 pip. I want to get out of the market. So there we go. Lovely winning trade for 65 pips. As usual, if you like the video, please go ahead, subscribe, and also don't forget to like it.